Okay, ni hao ma. All right, so we got a problem here. The chat's disabled. That's going to make it very difficult to communicate. So hopefully, moderator gets the message. In the meanwhile, let me move things around. Let me get set. And let me bring up FX Street. But happy Friday, happy Payrolls Friday, everybody. Unfortunately, I think the heat just came on in my office. Let me get things set up. Got my FX Street. Cool. All right, so we got that. See, I can't tell if the webinar has started. There's no chat, right? So what do I do? So anyways, let's do it this way. Let's just pretend. I'm going to pretend. G'day, mate. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here today. This is the 165th Non-Farm Payrolls Live that I've done with FX Street. 165th month in a row. Yeah, 165. What is that, 13 and a half years? More than 13 and a half years just for this one webinar. So I think I've been working with FX Street now for about 15 years. That's longer than your last guru, right? That's longer than your last guru has traded Forex. So anyways, I'm super happy to be here. FX Street, wonderful. Love FX Street. Traders Way, love Traders Way. Traders Way is a boutique foreign exchange trading brokerage firm that would love the opportunity to earn your loyalty and respect. If you like fast execution, competitive spreads, amazing swaps, visit tradersway.com right now and open a demo account. Download MT4. Enjoy. You can have an ECN account, fixed spread account, variable account. So again, I'm hoping to hear back from our moderator. Chat is disabled, so I have no idea if this webinar is running. Oh, yeah, I tried refreshing, still disabled. So it's going to be very difficult to answer your questions since I can't see your typing. So anyways, let's just pretend here. We're going to pretend. All right. First of all, what are we expecting? $1.60, $1.65? Oh, you know what? I should switch over here so you can see. That'd be a little better, huh? That'd be a little better. All right, $1.65, I think, is what people are kind of talking about on the street. What happened last week? Sorry, last month. What happened last month? A huge number. Do you remember that? Oh, here we go. $1.64 it says here. All right, cool. Right on. Thank you, FX Street. Now, wasn't it like 230,000 last month? Right? Or is it this? Really? 230,000 jobs, right? Yeah, so I don't know if it's going to be that again. You know, most likely everything will be fine. Unfortunately, I'm set. Oh, here's a different chat room live link. That's what it is. All right, hang on. I'm almost there. I'm almost there. We got a new chat. There we go. I got an old chat link or something. There we go. Ni hao ma. Now I can see your chat. So hang on. Let me integrate this. I appreciate you. Thank you, moderator. Oh, we got to go here. Let me open that. Let me get this. Let me pop that. Ba 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 ba. La da 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 da. And maybe we'll see chat there. There you are. Yeah, Rob says NFP number one for 2020. Yeah, so I guess, hey, Happy New Year to you. Sexy Crabber says what? Doesn't like my tiny cup? Come on, Sexy Crabber. A real man doesn't worry about the size of his cup. Okay. So anyways, where were we? Yeah, so last month we got this huge up surprise. I don't think we're going to get a huge up surprise, but I don't think we're going to get a huge down surprise. And unfortunately, I am set more to the downside than to the upside in the moment. And there's reasoning for that. I'm actually a long-term bull, but not at the moment. I know, right? I'm a long-term bull, just not now, not in the moment. So I'm kind of caught in between strategies is all it is. And so really, if we had a disappointing, right? Sexy Crabber says, oh, he doesn't hate my cup. Is this better, Sexy Crabber? That's better, right? Or do you prefer this one? Which one do you prefer, Sexy? So anyways, if a disappointing number came out, it would benefit me right now, but I don't actually expect that. So I'm going to get knocked out a bunch of break-even trades or something. It's just I'm caught in between strategies. So I don't want to mess with them because I want to show you the entries and maybe some of the logic later. I just have to survive between now and NFP and then after NFP. So hopefully if any of those are still open, I will explain how and why and all that kind of stuff. And then we'll look at the next step. Okay? So hopefully that makes sense. So we could do that. Let's also do... okay, and we can do, here, year end, no, there we go. What else could we do? Wonder if that would be helping. Little Reuters. I'm sure FX Street has something somewhere. I just don't have it in front of me. That's not really good. No, that's pretty good. Nah, I don't want a free trial. Anyways. All right, so that's good enough for me. So we can take a look at some trend data and all that kind of stuff. And then we can ask, do we really expect a big downside surprise? Probably not. So that's one way we can start our research. By the way, on FX Street, about 4, maybe 5 years ago, I posted a report called how to prepare for the employment prepare and trade the employment situation report. See, the thing is, there is no such thing as non-farm payrolls. There is no NFP. There isn't an NFP release. What there is a situation, an establishment report and a household survey. Okay? OFX Street moderators posted a link to some research for today. That's cool. I'll put that up there too. Oh, thank you. And then how to prepare for, look at all this wonderful stuff. Thank you, moderator. Very, very helpful. Oh, look at my big head. Hey, look at that. I don't have any gray hair. Cool. Cool. So we can take a look at all this stuff. What I want to get to, though, is that I don't expect a big negative number. Now, maybe there's some sort of, backlash, if you will, to last month's giant number, but I don't really think that either. So really what they do, and let me explain why you can get some big, weird numbers. The government calls up a few people, not many, like, I think it's like 20,000 people. I might be wrong. It might be 30,000. But they call up a bunch of people and they're like, hey, yo, you got a job? And they're like, yeah. And that's the end of the survey. Now, the person on the surveyee may say, well, actually, I have 3 jobs. I wash dishes in one kitchen. I'm a barmaid in another one, and I do something else. And really, this person's got 3 jobs. And the government says, yeah, we don't care. We don't care. Just, are you working? Do you got a job? Yeah, good. Thank you very much. Click. That's the household survey. But it's only like 20,000 or 30,000 people, 40,000, I don't know. There's 380 million Americans. So if you call, let's say it's 50,000, you call 50,000 people scattered around the United States, does that really give you a perfect snapshot of the whole 380 million people? I mean, think about it. What is the margin of error on those statistics? So when the government comes out and says, hey man, it's it used to be 3.5%, but now it's 3.6%. Are they really that accurate? They call 50,000 people, survey them, and then put it through the meat grinder and go, oh, boom. This is what the entire country is doing. Well, that's only one half of the equation because that only is the household survey. The other thing they do is they monitor companies. So they show up to a company, an establishment, and they look at their payroll stubs. So this is where, someone might be counted 2 or 3 times because they have 2 or 3 jobs. See, they're completely different methodologies. One doesn't care if you have 3 jobs. It just cares if you're working. And the other one is just counting payroll stubs, right? So they take this 2 data, the establishment survey and the household survey. They throw it into the meat grinder and they go, 3.6% unemployment rate. Right? Does that make sense? Yeah, does anyone actually got the call? Maybe they don't even do the call, right? I don't know. So, That's what we trade, guys. Now, why is this important? Well, the central bank has a couple of mandates here in America. That is to make sure people have jobs and make sure there's no inflation. It's not really jobs per se. There's the right amount of economic activity. Okay. So anyway, so that's why this is important, and of course, economic activity is very sensitive, or let's say jobs are very sensitive to economic activity, and then from jobs you have saving and spending, and of course, all spending is income. So if you go to the store and buy something for $50, that $50 eventually ends up as somebody's income. Okay. So if suddenly you lose your job and you cut back spending, you don't buy the sweater this month, or you decide not to lease the Lamborghini, well, that spending is now not someone else's income. Like now someone else loses income. And now maybe that causes, them to lose their job at some point, because that would be, before it's income, it's going to be revenue, and then revenue pays for expenses, but paying for expenses to someone else is their revenue. And eventually it all triggers down into someone's income. And then, of course, income comes down to spending and saving. And all of a sudden, right? You see what I mean? So if you lose your job, it makes it tough for everyone else. So they might lose their job, and then that makes it tough for everyone else. And then they lose their job. All right. So anyway, so the short part of this story is the Fed watches this information, and it is important information. Okay? So, is the American economy in good shape right now? Yes or no? And then another question is, what's the market going to be like in 2020? I hope you have an opinion. It's your job as a currency trader to have an opinion. Okay. Nicholas. Nick says no. Well, right? How about this? We're at full employment. Apple is at an all-time high. It's a barometer. What does that mean? Why do I care about Apple? Well, people bought their kids Apple AirPod Pros for $1,000 for their children for Christmas. Okay? So, really? Does that sound like people are poor? So everyone's got a job. Everyone that wants a job has a job. Okay? They're spending money like there's no tomorrow. And for some reason, the Fed has cut interest rates. The Fed, for some reason, is stimulating the economy. Well, what does that mean? They're driving up the stock market. They're pushing down the bond market, which means your mortgages are cheap, your car leases are cheap, your credit cards are cheap. That doesn't sound bad, does it? Think of the wealth effect. This has to do with your propensity to spend. So you study this in economics, okay? And the wealth effect has to do with if you have a job and you feel like the future is going to be good, you spend money. You save less and you spend more, which means that's somebody else's income and someone else's job, because you spend it, so you buy some product or service, so that keeps someone employed because they have to provide the product or service. And then that trickles down, profit and cost and all that. And then eventually it all trickles down to someone else's job. And they feel good. And their house is going up in value, and their stock portfolio is going up in value. Okay? So, more jobs, right? Now, think of it this way. The stock market in 2019 was up 30%. Okay? Okay, up 30%. What does that mean? Well, I think the average American needs $2 million to retire. So let's say they're almost ready to retire. They have $2 million invested into the stock market. And after a year, now they have $3 million. They made $1 million last year doing nothing. Okay? So does that matter? Oh, yeah. Okay? It does matter. It matters a lot. Okay? Very cool. So today we will get this number and it'll probably be good. Okay? Do you know the 164? You know what that is? That's the average. So experts are expecting the average. What does that mean? You add them all up, divide by the number of periods, and it spits out $1.64. So that number doesn't tell you anything. So it really comes down to good or bad. Okay? If the number is good or not bad, so that's 66% of the possibilities, right? It's either not bad or good. The stock market's going to go up. If the number is bad, the stock market's going to go down. And that's really what it comes down to. So right now, I'd guess there's only a 33% chance, just out of the probabilities, or not probabilities, possibilities. There's only a 1/3 chance that this comes down. Now, what's the probability of the number coming out bad? Not very high, I would say. And why would I have that opinion? Well, let's go through it together. Okay? Let's go through that together. And then you can make up your own opinion. Okay? So in my report, How to Prepare for and Trade the Employment Situation Report, which is NFP, I outline exactly what you need to do. So you want to look at the average non-farm payroll number. So look at a whole bunch of the last NFP numbers. Were any of them bad? No. The 3, 6, 12, and month simple moving average. You can create that. Is it down or up? It's sideways to up. Cool. We want to also look at weekly jobless claims, but again, the trend. We're only interested in the trend. See, today's release is only news. It's not fundamentals. It's only news. It's just going to create volatility, but in of itself, it's just a news release. That's all it is. Fundamental analysis is the analysis of economic trends that lead to a change in monetary policy. That's all it is. Okay? So you have to analyze things like the average weekly jobless claim, not what happened yesterday, not what happened last week or 5 weeks ago, but that trend and really the change in trend or relative change in trend, all of that is what's interesting. Okay? We should probably look at the ISM employment subcomponent, ISM services. Okay? You want to look at ADP, you want to look at the Challenger report. Okay? And then in this report, I also give you how to range trade it and how to scalp the volatility. And then I give you some advice. And I wrote this like 5 or 6 years ago. And then after I wrote this, FX Street created a whole part of their website, I would say primarily around this advice. So before they didn't cover like Challenger report and all this kind of stuff, but now all that's in this nice little website and organized. I don't know where it is, but anyways, let's go through it. Let's go through some of the data. Okay, so we're expecting $1.64, but like I said, if you just add up the last 12 NFPs and divide by 12, you get $1.64. So is that truly analysis? No. You know what I mean? Okay. Raymond says, for those that did make 30% on their stocks, Wayne, when they do cash out, How does that affect us? Well, I said retirement account, so they don't cash out. They're stupid money managers that sit on 1% earn 1% management fee. They don't do nothing. They'll call their clients up and say, hey, we're at an all-time high. Don't do anything. We're not going to get out. And then the next time they make a phone call, oh my God, the stock market's crashing 20, 30, 40, 50%. Don't do anything. Why is that? Wealth managers make 1%. Why would they tell you to get out? Now they don't make money. So they're not going to get out, Raymond. Unfortunately. Now, hedge fund managers will. So it really comes down to where those people live. So I'm talking about Americans that have $2 million in their retirement account invested in the stock market. They made 30% last year, right? My children made 30% last year in their college savings accounts. Okay? Seriously, boom, 30%. That's a good return, guys. Think of it. The stock market probably paid for 1 year of Harvard for my children. Cool. But if an American dumps their stock portfolio or their college savings fund, like think of it this way. Your retirement account, your college savings funds, you can't dump those. They're long forever, right? You can't cash out of your retirement account until you retire. So if you're 60 and you made $1 million in your stock portfolio, you can't really like dump it and spend it, right? So it's very difficult. We call it sticky. They're sticky funds, right? They're not traders like you and I. A hedge fund manager, what they'll do is they'll wait for the dentists and the lawyers and the accountants and all those guys that think they're super smart because they're super educated and they could do it themselves. They're going to buy Apple now that it's at an all-time high, right? Now, here's the thing. You're paying too much. A professional, for example, would have bought Apple years and years and years ago. Makes sense. I owned Apple at $6 and I sold it just after Steve Jobs died. That's good. I made 100,000% return on investment or something ridiculous, right? But anyways, a professional money manager has mandates. Like if you're a Forex hedge fund manager, you have a disclosure statement, a disclosure document, your DDoc. And your DDoc tells the clients what you do. And it includes things like risk management. So when you invest into a money manager or some sort of fund, they'll tell you that, for example, I'll just make up a number, none of the portfolio stocks can represent more than 5% of the entire portfolio. To say it differently, if you buy this mutual fund invests into tech stocks. But no stock can be more than 5% of the overall portfolio, okay? So, let's say a year ago you bought a bunch of Apple. Now, at the end of 2019, beginning of 2020, Apple prices have doubled in that 1 year. So let's say you went max. You had 5%. You took 5% of the portfolio's funds and you threw it all into Apple last year, and now that is up 100%. So now, if everything was relatively the same, right? Now you have 10% of the fund in Apple. But in your DDoc or your disclosure document, it says you can never do that. The maximum is 5%. So now you have to rebalance. So how do you rebalance? You sell the doctors and the lawyers and accountants that are super excited because the stock has doubled and now they want to buy because they're so smart. Or maybe Dow hits 30,000 and there's a big frenzy. Woo, Dow, 30,000. Well, you know, people show up late to the party, right? So these managers, they have to rebalance. So they have to sell a whole bunch of Apple stock to get back to the 5%. But now they have cash. So your first thought is, when or how are they going to rebalance? And the second thing is, what will they do with that cash? How many people here think a wealth manager or, a mutual fund manager would reinvest that cash back into the stock market? How many people here think they would do that? The Dow's at 30,000. The Apple stock doubled in 1 year. Are they going to cash out and then buy it back? What's your opinion? This matters if you're a Forex trader, by the way. If you're a little bit lost, it'll have to do with money flow. Can't get this watch off. Huh? Benji says, don't think so. Kevin Hope says no. Cash out and wait. Now, let me deal with the cash out wait. If you're sitting on cash as a money manager, you risk that your clients show up and say, well, if you're not going to deploy my money, give me my money back. So they never do that. They never sit on cash. Wait for a discount. Yes. What I think many will do, and of course, it depends on the mandate of the mutual fund or the hedge fund or stuff. But imagine you're a hedge fund now. You're not going to buy at the all-time high. You're not going to, sell Apple and then buy it back later. What you're probably going to do is look for new opportunities. You're probably going to invest into Europe. Why? Europe's cheap. See, if you cash out of America, the bond market pays you nothing in yield. So you got very little yield, right? Or you pay really high prices for stock. So what's the opposite of that? What would a hedge fund manager want to do? Remember, there's smart money. What would smart money want to do? Well, they want to find either lower prices or high income. And they're going to find high prices and low income in the United States. And they just made a buttload of money because they bought the Dow at 8,000. Okay? And now it's at 30,000. And all they're doing is rebalancing. So it's just money. They just have this free money that didn't exist before. So they push their Apple position back down to 5, but now they got this cash. See, it's like free money. You're like, okay, well, 5% of our fund is Apple again. It used, so we rebalanced and now we have cash that just fell out of the sky. So now what do they want to do with it? Find something cheaper to buy or find something with higher income to buy. You see what I mean? So where would you find that? Well, Europe might be cheaper. Emerging markets might have a higher income. Okay? And this will impact the flow of money in 2020. Yeah, and don't forget Asia, of course. Thank you, Peter. Okay? This will impact the flow of money in 2020. If that's true, what if I said is true, if hedge fund managers and wealth managers and mutual funds and all these institutional investors in the United States rebalance and suddenly have a pile of cash and don't want to buy at high prices or at low income, they might look for a better deal. It's just how capitalism works. If it's too expensive here, go across to a border and find a better deal somewhere else. And money flows around the world. That's when things are good. In that case, the dollar might weaken. That would be part of my 2020 analysis. What do you stink? Smell like a plan? So let's go through the NFP number. What's the number going to be? I don't care about a number. Okay? Blessing says, what do you think about Euro USD? I just told you. I just told you. Let's see. Money might flow to Europe from the United States. I just told you, dude. Right? Anyways. All right. So let's start with some data. Where's their actual number? New order. Employment. Huh. Up. Not as fast as it was. So you can interpret this any way you want. What this means is there are jobs. They are adding jobs. But let's say, I'll make up a number. Let's say there are a million jobs per month, and now there's only 600,000 jobs per month. Is that bad? You're like, well, that's a lot less than before, but that's still a lot. So you can interpret this the way you want. You can say, well, this is bad, or you can say this is understandable, okay? But right now, okay, we're adding jobs. Okay? It's not bad. See, remember, I'm very binary in this situation. No, Javier, he's already done that. He did that 5 years ago. Actually, it wasn't Jim Rogers, though. It was George Soros. George Soros did that about 5 years ago. That's why North Korea is in trouble right now. But anyways, so there are jobs being added, right? And I'm binary is where I was getting, in the sense that this is either good macroeconomic data or bad. And so by good, you get like not bad and good. Not bad is just as good as good. Because not bad is, by definition, not bad. So the only thing that could really be the surprise is bad. Because if it's good, you'll say, oh yeah, well, it's because we're in a growing trend. But if it comes out like not bad, or not bad, which means not good, like it comes out $1.64, just like experts have said. And remember, the experts made no real analysis. That's just the average. So there's no analysis. That's basically a guesswork, with lazy guesswork, in my opinion. But anyways, if it comes out $1.65 or $1.50, 150,000 jobs, people will say, oh, that makes sense. We're still adding jobs, but because, the rate of change is slower. Yeah, makes sense, right? So it doesn't change anything. Will it change the policy at the Fed? No. Okay. And that's it. But can you interpret this data here, ISM, this data here? Can you interpret this employment subcomponent of ISM as the number in non-farm payrolls is going to be bad this month? It's going to come out 80,000. Is that a reasonable interpretation of that data? You're like, oh my God, NFP is going to be bad. What do you think, guys? Let me know your opinion. Gotta keep an eye on the time. What do you think? Oh, question mark. Thank you, Lucas. That's helpful, by the way, the question mark. Benjamin, we're only talking about this. I didn't say you tell me about the entire NFP number. I'm telling you, I'm asking you, does this piece hint or lead you to believe it could be bad? I mean, it's not a complicated answer. The answer is no. None of this says, oh, bad. No, you look at it like companies in America are adding jobs. Maybe not as fast as they used to be, but they're still adding jobs. So does that say bad number? No. It won't be interpreted as bad. So it'll either come out as expected or it'll come out on the upside. All right? Come on. Don't overcomplicate it. Okay. Challenger, Christmas, and Gray. These are layoffs, guys. Job cuts fall by 11%. Okay? 11% drop in layoffs. Does that sound like bad non-farm payrolls is about to be released? See, like you could lose your job and become unemployed. This is layoffs. This is like more than 100 people getting fired all on the same day. Okay? You see what I mean? So that doesn't say bad either. And then let's look at unemployment claims. Just a couple of years ago, it was 316,000, and we got down to like 210. We have half as many people right now filing claims than 5 years ago. Half as many. Does that sound bad? No, that does not sound bad. Everyone that wants a job has a job. If they lose a job, they very quickly get a new job. Okay? So, long story short, I don't know what NFP is going to be today. I don't know if it's going to be 364, 384, 2004. It doesn't matter. It just doesn't matter. And Bonnie says, bad. I think you were talking about Challenger, Christmas, and Gray. No, less people being laid off is not bad. 11% drop in people being laid off. That's good. Less bad means good. Okay? So here's what I'm getting down to. I don't know if it's $1.50, $1.64, $1.84, 204,000 jobs that the headline number comes out as. It doesn't actually matter. It doesn't matter. Okay? And that number is probably already priced in. So I wouldn't expect a big move today unless there's a super shock, right? Like 84. Okay? Okay? And what we're looking for is, will the Fed cut interest rates further in 2020? If the Fed cuts interest rates further, the US dollar will get strong. I know you might not understand that. I know. Just listen. Give me time. If the Fed, if it looks like the Fed might cut further, the dollar will get strong. So for example, the number comes out today, 84,000 jobs added. People are like, oh my God, only 84,000? This is it. This is the top. Everything's coming down. Boom. Stock market crashes. Everybody dumps Apple at all-time high. Dow never hits 30,000. Whatever. Boom. It all comes down. Save us, Fed. Save us. Fed cuts interest rates. Dollar gets strong. Okay. Cool. But there's nothing in the cards that say that. So if you hear that from a talking head on TV, they have no evidence. They're just talking their game. They're talking their book. Now, the funny thing is I would do really well today if we had a disappointing number, but I'm not that wasn't based on the number, it's based on something else. And I'll go through these charts. If you stay to the end of today's webinar, it's 3 hours. Well, there's 2.5 hours left, right? Or actually even less than that. There's only about 2 hours left in today's webinar. If you stick to the end, we can cover things like carry trading, like swing trading, like scalp trading, like day trading, like intraday trading. We can cover fundamental analysis like monetary policy. Okay? So if you stick to the end, we can cover all that and more. Anything you want, my friend. I'm here to share. What do you think the reaction of gold would be? To what? Okay. You know, let's not use this one. Let's use this one. Okay. You have to remember, Gustavo and everybody else, I don't guess. I'm not a guesser. I don't know what non-farm payrolls is going to be. I do some analysis and I have an opinion. Where does my opinion come from? Fundamental bias. So if I'm a bull on gold, it's very easy what I want to do. Okay? Let me get my drawing tool. Okay? If I'm a bull, I buy dips to support. That's it. Okay? Let me get this there. Okay. So let's show you how complicated life can be. If I'm a bull on gold, see, that's everything right there. That's your job, guys. Nicholas says, does gold correlate with NASDAQ? Well, NASDAQ correlates with risk on, risk off. Risk on, risk off correlates with global macroeconomic activity. Okay? So anyways, and by the way, everything correlates with everything else. There's the degrees of correlation and there's direct or inverse correlation. But anyways, your whole value in this market, guys, is determining whether you're a bull or a bear. So, for example, look at this. I know you can't see this, and I know there's a bunch of pivots in the way, but bear with me. Quick crying. Okay, let me give one more click. Well, it's not going in. Is that the best I can do? Okay. Buggy today. Buggy today. Weird. Let's go back. See if I can get this in there. What I'm trying to show you, and for some reason my charts aren't letting me do it today. Not sure why. All right. See this purple area? That's the old top. See? It's the old top, right? And we go all the way across to today. We breached it, and we're now back there. So I could be a bull. Do you understand? Just on technical analysis alone, I could be a bull. That decision is your value add. If you don't have an opinion on bias, you're not going to succeed as a trader. Okay? So, with that being said, if I was a bull, now all I have to do is find support. So the first thing I would say is this, in my opinion, is support. The next thing I could look at is, and by the way, that support is on price. Now, support in a market comes from this number here. How did I get that number? You look at the current high, the current low, and then the close. Well, we don't know where the market's going to close today, but let's say close right where it is right now. Then, based on what happened this week, next week's buy zone is this yellow area. Okay? So now I have, as a bull, I have identified support in price, and I have found price, okay? And then I've also found support in market. So now, as a tactician, I can use technical analysis on a smaller time frame than a daily to identify a setup like this. And I would be long and strong, down to get the pippin on. Okay? Now, Ian says, no, Ian's a bear. I'm cool with that too, Ian. You just can't sell here. For the same reasons it's a buy zone, it's definitely not a sell zone. So if you were going to sell, you would have to sell high at resistance. So now you have to do the same process. What do you mean by resistance? Well, there's something here, there's something here, okay? But there's nothing here. There's no resistance here. Okay, only a fool would sell now. Okay? Because by definition, we all know this to be true. Bears sell high. Bears do not sell low. Well, there's nothing high about this. Okay? Cool. So in about 6 minutes, we're going to get non-farm payrolls. Please post the number when you get it. Okay? And what I'd like to do now, let me move my camera, is to identify some support and resistance. Okay? This is my 165th month of doing this webinar. So I'm assuming 99% of you know how to trade this because I've written articles, I've done special events, I've done special webinars, I've done recordings, and I've done this 165 times in front of the FX Street audience. 99% of you know what to do here. So the most important thing is let's pick a currency and identify support and resistance so we can set up these trades, I should say. Benjamin. So Benjamin brings up a point. Okay. Benjamin says, hey, Wayne, when can we start planning this week for next week's pivots? All right. I lead a swing trading group live every Thursday at 11 a.m. New York time. On Thursdays, we plan trades that will be in the week ahead. On Thursday, we might make a trade, or it may not develop till Friday, or may not develop till Monday. But the analysis we do on Thursday sets everything up for the following week. We're setting up trades 2, 3, 4 days in advance. So Benjamin, we do that on Thursdays. We plan Monday's trades on Thursdays. Now, it doesn't mean you wait till Monday to take it. But if you take it on a Thursday or a Friday, you're probably going to be in it Thursday, Friday, all weekend, Monday and Tuesday and Wednesday. And by Wednesday, you're probably taking profit and you're out. But you're selling on Monday's resistance on Thursday or Friday or Monday, depending on when price hits those levels. So we're somewhere between 24 and 72 hours in front of the market. That's what we do. Okay? And to do that, you're like, well, how do you do that? How do you plan Monday's trades on Thursday? You use leading indicators. So we always trade next month before next month happens. We always trade next week, this week. And when I do my live webinars every morning, I'm not interested in today. I'm always teaching you how to plan tomorrow's trades. Today is already irrelevant. If you're just logging in, you're like, what am I going to do today? You're not trading properly. If you walk in, you're like, well, I'm gonna scalp NFP and that's my day. That's a very, 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 very tiny part of Forex trading. In fact, you could totally skip it completely altogether and it wouldn't impact you one way or the other. Okay? How many people like that idea of spending an hour a day, an hour a week, or an hour a month setting up trades in advance? That's what we do. Okay, I got to get to this, guys. I got to get to this. So let's start here. And where's my drawing tool? Okay. Now the first thing that's in play is this is a bearish setup. And the target based on those entries, that entry and this entry, there's two bearishnesses, by the way. Okay. Bearish number one is this is a monthly bear. And these guys are targeting here. And this is a weekly bear. And they're targeting here. So this tells me probably up and then down. So NFP will probably weaken euro dollar. And then on Monday, we'll dump this. Or Tuesday, maybe, depending. Okay? All right, lots of people say you like. Visit swing.fxbootcamp.com. And by the way, one of the things I did an hour-long Q&A with my team yesterday. And one of the things we decided to do is sometime very soon, maybe in a week, maybe in 2 weeks, that I do every single day swings, right? So I'll teach you how to day trade. I'll teach you how to daily swings, weekly swings, monthly swings, all in the same group. And I'll teach you how, like, you can spend 15 minutes a day on trade planning. That's enough. All right. So anyways, going back to this, guys, this tells me up and then down. Okay. So it could be NFP might jack this up and then we take it back down Monday or Tuesday. All right. The numbers coming out, guys. Numbers coming out. Oh, thank you, FX Street. Numbers coming out, yo. Give me a number. Post it. Looks like we got her up. $145. That's okay. It's not bad, guys. It's not a bad number. Don't freak out. It's not a good number either, but it ain't bad, and that's what I was talking about. Okay, let's go further out. It seems to me that there'll be an up and then a down. So I might be interested in selling this around 111.50. Okay? 111.50 might get me to sell this. Now, I'm a long-term bull on this pair. I'm just not in this exact moment. Okay? See, the thing is, if it's a bad number or interpreted, if it's interpreted by the market as a bad number, it leads to the stock market coming down because the end of the good times might be over and the Fed might cut interest rates further to try to stimulate, whatever. But that's not bad enough and it's not good enough. That's a benign number. It's like it didn't happen. So here's the way that professional traders trade, guys, with a benign number. Nothing's changed. That wasn't good. It wasn't bad. Well, it just simply wasn't bad. Meaning, it wasn't bad. What I mean is it wasn't bad. It was not bad. It was neither good nor bad, so it was neutral. So traders are going to do what they're going to want to do anyways. So people that were expecting this to drop like a ton of bricks, which means they were expecting a bad number, they were expecting the further Fed cuts, they didn't get that, so they take profit. And by the way, let me show you this. That swing trading group I was telling you about, here's the Tuesday sell, and here's the target. The thing is, we did this last Thursday. So last Thursday, if you were a bear, your trade plan would have looked like this. This is a monthly Thursday sell. And then here's this one. Okay? So what I would say is still the very likely move is the future's going to look like this. Oops, I wanted this in blue. Let it come up so I can sell it. Okay? Well, Peter says it's not bad enough, but it's not even bad. 145,000 people got jobs. There's nothing bad about that at all, right? Now, how did Canada do, by the way? The moderator posted the website above. Swing.fxbootcamp.com. All right, let's do a kitty CAD. I want to check out kitty CAD. Come on, kitty. Let's do a kitty CAD. Okay. You ready for this? Weekly swing. This is the buy. This is the target. Okay. So that might be the top for kitty CAD at 84. You might look for a counter trend trade. Let's go to this USD CAD. You ready for this? Based on swing trading the way I teach it, there's your Monday buy. There's your target. It's over. Okay. So there's two perfect trades on kitty CAD. How about CAD Swissy? Let's go out a little more. And this is an inside week. This did nothing. So you may have started the month or the week right here as a bear. You could have taken it down, but you were expecting to be lower. You didn't get that. It came back. And we're in an inside week neutral zone. So you haven't lost money, but you're disappointed, right? Now, the interesting thing is, I think bears have lost this game. So like this is where bears sell. This is where bulls buy. On a monthly basis, guys, monthly. So if you were a bull and you missed this entry, so one of the things we do is we front run. So if you were a bull, that's an easy front run. But let's say you missed this. You had to wait this whole time as a bull for a trade. And this was your first monthly trade as a bull. So we don't actually know if the bulls are going to drive this up and up and up and up and up and up. All we know is bears sold where they were supposed to sell and bulls bought where they were supposed to buy. And what this probably will lead to, we're talking about probabilities, right? Because it's a guess to say this will go higher. Why? Because it's an uptrend? It's not an uptrend. So if bears are selling where bears are supposed to sell, and if bulls are buying where bulls are supposed to buy, what do we know? Bulls and bears are trading. We don't know who has the majority. We don't know who's going to overpower who. All we know is that this is neutral. This is a range. And the way that you trade a range, guys, besides if you're a bull, you buy at support, or if you're bear, you sell at resistance. The second way of trading it is if you're a bull, let it break, buy the dip, and do this. Because in this case, you're trading a breakout and you're buying high. You're buying low. Or if you're a bear, you're going to like let it go up, let it come down. And then if, because we don't know if it will, but if it breaches, let it breach, let it pull back, and you sell there. There's no guessing. You understand? Peter asks, let's look at Euro ZAR. Okay? Cool. All right. We'll look at Euro ZAR. Euro ZAR. I have it in here. My high yield portfolio. Lira, sorry. Let's not do Lira. Let's do ZAR. Okay. Cool. Peter says, look at Rand. It's falling. Not really. All right, so I'm short here. Okay, you can see here, I have my stop at break even, and I have this down, 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 up, up. And the next part of my plan is down, down. Today's target is 1558. Okay? I'm up 1,900 pips. I know, right? But I feel like it's just the beginning, right? So to me, there's nothing exciting about this, because the obvious scenario here, you can see, look, I got this as resistance, I got this as resistance, I got these as resistance, okay? So as far as I'm concerned, it's just doing this, and it's the first move down. And here's my target for today, 1558, okay? Okay. Oh, thank you for posting the Canadian report. Was it negative 71 or no? That doesn't look right. What did you type? I see 35, 25, negative 71. So I guess that's a 35. It's better than their negative number last month. Like the Canadian number is so volatile. I don't know how they come up with it. Okay. Now let's move. Let's look at, so that's Euro Rand. Here's the Euro Lira, very similar situation. Okay. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 down. How many people were with me for my free webinar yesterday? I do a free webinar every single day if you're a client of tradersway.com. Yesterday, I talked about this bearish setup, how that worked, and then I talked about this bearish setup, how that worked. Then I talked about this bearish setup and that worked. And then I said, here's the trade plan for Monday. Up to 6, right? Up into this zone, this pink zone, and down. Yeah. Nice, right? You're welcome. Huh? So we haven't, don't get excited though, because we haven't breached. We haven't made the lower low. Right? Oh, thank you guys. Hey, out of loyalty and respect to FX Street, can you click the like button? Throw down a like button. Click the thumbs up thingy and say, thank you, FX Street. You're good people. Okay? Thank you, moderator. Leave a comment thanking our moderator. We have the best moderator of all moderators I know. Cool. Let's back out a little bit. Okay. What happened here? Fed cut interest rates. Stupid Fed. What happened here? Fed done. Let's add some more time to this chart. Okay? This whole period here was the Fed messing things up. Okay? So what I'm hoping to see, as you can tell, I'm short right here. And what I'm hoping to see is something that looks like this. But right now that's hope. So I got to use my analysis here, and I can see there we're at support. Therefore, it's meaningful to me on a smaller time frame that if we get something like down, up, down, up, down, right? I'll feel more comfortable. Cool. Cool, right? So like I said, I'm going to teach you how to swing trade. Monthly swings before the month starts, weekly swings before the week starts, and now daily swings, which means by, let's say, noon New York time, you're always planning tomorrow's trades. And by the time New York opens up tomorrow, you're already done tomorrow, and you're planning the day after tomorrow. Teo says, how do you know when direction changes? That's the easiest part. That's basic technical analysis. Okay? That's why we use technical analysis. So for example, what is a trend? Higher high, higher low, 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 higher high. So how do you know the trend is over? Lower low, lower high, lower low. Done. It's over. Is there seasonality to this trade? Well, there's seasonality to everything. So like I said with non-farm payrolls, it's binary. It's either risk on or risk off. Okay. Right now, the same thing exists for this trade. This, instead of Euro Rand, this is USD Rand. This is where bears sell on a monthly basis, by the way. And this is where bears sell on a weekly basis. And this is next week's sell zone right here. So right now it seems much more bearish than bullish, which means we have a scenario like this. Okay? Now that doesn't, this declaration, this technical analysis doesn't actually tell us yet if we're going to make it below the current lowest low. Okay, we don't have that enough information except for this. But that's really not enough. The weekly says if you sell here, you're going to get this down to 1398. Let's just say 14. Okay, all this says currently is it's going to drop to 14. It doesn't say if it's going to drop to 13. Now, if you have a more a higher time point of view, you're going to see it differently. Do you guys know the theory of relativity? Okay. Imagine you're sitting on the moon. Okay, that's you on the moon. And there's a meteor coming right at you. Okay? What does it look like to you? Can you tell how fast it's traveling? It's coming right at you, dead straight for you. Is it easy to predict how fast it's moving? It's important information because now you can figure out when it's going to hit you. You're staring at it and there's no indication of speed. It's coming right at you. And only at the last second does it get really, really big and then boom, you're dead. Now, what if you're on the moon and it's moving this way? Is it easier to figure out how fast it's traveling? It's going from right to left and you're going, wow. Because now you have point A, point B, point C, and in your mind you're able to measure how quickly it's moving this way. Because you can visually see it. And you can compare it to maybe the moving stars as it's passing the stars behind it. You can get a sense really how close it is to you and how fast it's traveling from right to left. If it's coming right at you, the stars behind it aren't changing. And until the very last second where it gets really big, you can't really tell, okay? It's all from your point of view, relative to the moving object. And the interesting thing about relativity in Forex is, you can say, is this bullish or bearish? Well, depends. There's your daily point of view. Here's your 5-minute point of view. And you might find on one time frame it's bullish and on the other time it's bearish. And you have to line these things up. Okay? So you always have to pay attention to your point of view. Are you talking about till the end of 2020? Or are you talking about the next 15 minutes? Do you know what I'm talking about? So I'm just looking at my positions. Nothing's changed since non-farm payrolls. Okay? Cool. So anyways, there's some of that. So let's go through some, what do you want to do? Yen pairs? Dollar pairs? Let's do dollar pairs. Okay. When did I do this trade? 8 days ago. Our general plan was sell up here 8 days ago, guys, when we were here. The plan was to let it retrace back to 131.70 for a sell. So our sell was sell here. You can see it. And the target was down here. I'm sorry. It hasn't worked out all the way yet. I'm sorry. But would that have been helpful if you knew that 8 days ago? We did this here on Thursday to say, hey, let it rise up to 131.75 and dump it. 48 hours. 48 hours of trading, because there was also a weekend in there, right? But anyways, that's how you need to be trading, guys. On a Thursday, you should be talking about a Friday or a Monday's trade. If you log in on Thursday and say, hey, what's the trade for today? You've already failed as a currency trader. It's a matter of time. It's only math. Okay? It's only math. If you make 25 pips per trade, and then you close your trade, and then you do another trade and you make 18 pips, and then you close your trade, you might feel really good, except you're doing it the most difficult, riskiest, most effort trading possible. And ask yourself, can you really trade 12 hours a day for long periods of time? I've been doing this webinar for almost 14 years. Just this webinar. So I can speak from the point of view of trading 12, 16, even 24-hour days of trading. Eventually, your mind and your body will break down and you will make mistakes. But usually, here's what happens, especially for those that want to get rich quick. Okay? For those that want to get rich quick, what happens is you make 25 pips and then you cash out. Then you make 18 pips and you cash out. You make 22 pips and you cash out. And you're like, oh man, I made all these pips, but it only added up to dinner at McDonald's. So then you jack up your leverage. What happens next? Blow up your trading account and you're dead. I was a currency trader once. It was a tough racket. But 95% of retail traders lose their money, so no big deal, right? And you justify it and walk away. A failure. Let me tell you why that's not the way to do it. Gregory, there was an issue with the video. I didn't notice until right before this webinar, so I'll try to do it after the webinar, okay? I apologize, Gregory. But it should be done. I just got to now post it. YouTube had to do something, and it takes 2 or 3 hours, so it should be done by now. Anyways, what do we know as the simple universal truths of all trading? Whether it's stocks, bonds, currencies, fixed income, real estate. What do we know? Buy low and sell high. That's one rule, right? Can we all agree with this? Can we agree that that's one universal truth? Okay. Then the second universal truth is small losers and let winners run. Can we agree to this? That those are two universal truths of all trading and investing. Of everything. It's so elementary, it's universal. Then why is it that 95% of retail traders trade and make 25 pips and bail and have 178 pip losses? And then maybe bail, maybe not bail. Why is that the case? Like just the idea of you make 25, you make 22, you make 18, you lose 33. Like you do this day after day after day. Does that follow both universal truths? You buy low, sell high? Maybe. Not necessarily. If that's all you're making, bro, seriously? That's all you make is 25 pips, 30 pips, 50? That's it? That's the output of your analysis. Your hardcore analysis and trade plan was make 22 pips and jump? My guess is there's no plan at all. It's not greed, it's stupidity. There is no plan. You're like, I think I'll trade the doji. Oh, that's a Morningstar reversal pattern. I guess I'm supposed to. Hope it works. How about this one? The most retarded of them all. I'll wait for London to open, and then after London opens, I'll trade because I guess if there's green candles, I should buy like they bought. Like really? That's what you do. That's your big thing. That's your shtick, baby. Let London open, and then after everyone's already made their trade, you're going to live off the crumbs of people that actually have trade plans? Oh my gosh, how embarrassing is that? What are you going to do today? I don't know. I have to wait until after London opens, and then I'm going to wait for after everything happens, and then maybe I can make 25 pips. Oh my gosh, seriously? And you want to be a professional and drive your yellow Lamborghini around town? Look at me. Now you got to love me. Come on, dude. Add some value to the world. What's your trade plan? Well, have a trade plan, you have to have a bias. Things like, that's resistance, it's going to fall. And then you're going to wait and catch the next move down. Then you're going to wait and catch the next move down. So you got to think about tomorrow. Tomorrow, I'm probably going to sell around 131.40. Maybe 131. Hey, look, we're near that. So if this gets near 131, I'm going to sell it. That's called a trade plan. Is it near 131 right now? No. So what do I do now? Nothing. It's probably going to take some time. I'm planning the future, bruh. So let's do it this way. Let's do it an if-then statement. Kind of like a plan, right? Okay. If price nears 1.3100, then look for bearish reversals. Okay? Which means if it gets back to 131, then drop out of the hourly chart, drop into a 5-minute chart or a 15-minute chart, whatever you feel comfortable with, and look for technical analysis to tell you it's turned bearish. Sell the lower high. Wait for the lower low. So it does this. Up to 131. Then has a big drop, lower high, and then take the shot here. Or let it make the lower low, then sell the lower high. Or let it make a lower low, then sell the lower high. Or let it make a lower low, then make it lower high. Hopefully you don't have to wait for 5 instances of it. And now here's the thing. You ready? Because you put the work effort into your trading. Your plan is telling you, if you sell 131, okay, this is probably going to drop to 129.50. 1.31 down to 129.50. How many pips is that? Huh? How many pips is that? Everyone's struggling with the math. Worth more than 25 pips. That plan would take me a very little time, guys. It probably takes me as much time to make a true, real trade plan based on bias, which is fundamental analysis, and then true technicals, tactics. Okay? And I'm not interested in today per se. I'm interested in the bigger move. That's only a weekly swing trade, by the way. Okay? And do you know when this trade plan was created? Yesterday. If just figuring this out now, this is what you should have done yesterday to say, well, between now and Monday, I want to short as we approach 131. Now, let me review here. I didn't say go up to 131 and then drop a lot on this. What I said is, as it nears 131, drop into a small time frame and do your job, bro. Look for reversal patterns. To confirm the market rolled over at your price. You are the one in charge. You demand. You're the king or queen of your domain. Or you're simply a liquidity event to someone that actually has a trade plan. Okay? So how long did it take me to teach you this? Well, it took me a while to explain it and stuff. But it's not hard work. You just have to know how to trade. Okay? Do you understand? I want you to think bigger. I want you to act like the trader you want to be. I just went through logic with you. Universal truths. Buy low, sell high. Did I achieve that? Yes. If I'm a bear and I see this as a downtrend, yes, this would be a sell high scenario. Let the winners run. Yeah, I'm letting the winner run. I'm looking for 150 pips on this, or I'm too embarrassed to take the trade. Sir, how do you deal with fear of missing out? I just taught you. Let me explain. I'm planning my trades 1 day in advance, 1 week in advance, or more. There is no fear of missing out. Missing out means you're reactionary. You're like, oh snap, did I just miss that? I'm not reactionary. How many people here can confirm I have trade plans 24 weeks in advance? You know what my trade plan is. How many people can confirm that? I'm just making up a number. It could be more than that. But I randomly pick 24 weeks. How many people here have fully, completely been educated on a trade plan that I had, predicting what I was going to do at least 24 weeks in advance? And let me throw the kicker in here. Not only did I explain it to you 24 weeks in advance, I actually took the trade and I made money. I'm not talking about tomorrow or next week or next month, months in advance. Step-by-step logic, step-by-step technicals, step-by-step took the trade, step-by-step made money. What do you mean fear of missing out? What do you mean missing out? There is no missing out. Why? I do the hard work. Genius? No. Crystal ball that tells me the future? No. Do I travel through time? No. Do I have a ridiculous, sickening work ethic? Hell yeah, bro. That's it. If you have half a brain and a ridiculous, sickening work ethic, I can make you a successful trader. It's only a matter of time. You will either become a success or you'll quit because you can't hack it. It's too hard. That's it. I'm sorry. It's too hard. I'm in an elite program at Harvard. 3,000 people applied to get into my program, all successful executives. 20 were picked to be in the cohort. Less than 1% were accepted. And now there's only 9 left. It was too hard, too difficult. They couldn't hack it. And Harvard has canceled the program because they're like, oh snap, we've asked too much. I'm ridiculous. So if you have a ridiculous, sickening work ethic, I can help you. I got your back, dog. You will be a success. I know you can do this. I know you can do this. This is technical analysis. That's not that complicated. I just have to share with you how to do it. Maybe it'll take a year or two. Not a problem. The second part, fundamental analysis. Hey, I have a macroeconomics degree. Cool. I can share that with you. I can give you a Harvard education. Great, done. There's nothing in your way except lack of work ethic. Sorry. But here's the cool thing. If you can pull it together, you can live off the greed and the sloth of all hedge fund managers. Okay? All right. So what's happened here? It couldn't even get through the first level of resistance. It couldn't even do that. I said it would go up and down. But I thought it would go higher first and then drop. It didn't even do that. How embarrassing, huh? Poor euro. Poor euro. Couldn't even do that. How embarrassing for euro. Let's go. Let's change the template. Remember, I wanted this. Couldn't even do that. How embarrassing for euro. So, if this continues now down, I'm not saying it will, but if it does this, then I'll probably counter trend this next week. Not probably, I could, I might. But right now I'm going to pretend like nothing happened. Remember, I can only sell it high. So even if I'm a bear and it falls here, it doesn't help me. I can't sell low. I can't sell low. Universal truth. Sell high. Right? So let me ask you, does this look like I'm selling high? If I sold right now, is that high? No! Is that selling at resistance? Let me check. This is support of the market. This is the support of price. I see two levels of support, no resistance. This is resistance, by the way. This is the daily sell zone. Daily sell zone. So like I said, next week or probably the week after, I'm going to spend a whole week with the swing trading group. Every single day, I'm going to teach how to swing trade the day, the trade of the day, right? I already teach them how to swing the week, which is the trade of the week. And I also already teach how to do this monthly swing trading, which is the trade of the month. So imagine every day you did a swing, every month you did a swing, every week you did a swing. This is worth, depending on the currency pair, this is worth 60, this is worth 150. You know what, and this is 300, okay? I guess if I was smart, this would be 75. So the day trade is 75 pips, the week is 150, the month is 300 pips. Okay? So let me show you, for example, template, day trading bearish. You ready? You ready? You ready? You ready? There's the sell. Look at sell 111.06. Right? To 111.12. You see that? 111.12. 111. Let's actually put this in here. Okay. Let me open this up. Hang on. Horizontal line property. 111.23. 1.11123. What? Now, when did we know this? Yesterday. 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 We knew the sell zone was 111.12. Sorry, 111.13. 111.13. Yeah. Huh? Noise. I like that. I like that. Noise. Anyways, is anyone going to join the swing trading group so we can do all this together? Daily swings, weekly swings, monthly swings. Hey, anybody going to join? Let's go. Yeah, nothing's happening in the market here. My portfolio is just stalled completely out. Thanks for nothing, NFP. Okay. So here we are, Kiwi, Swiss franc. I sold one here. I sold one here. Oops, well, I guess I should do it this way. Delete. I sold one up there, see it? And I sold one here. So, what, pray tell, am I going to do on Monday? This. See? I have a trade plan. Some people log in and say, oh, what should I do today? Oh, I don't know. That's my weekly plan for the entire next week. Will it work? I don't know. I don't know, but I have a plan. I'm in control of what I'm going to do. I know what I want to do. I know the price I want to do. I know it's either going to happen today or Monday, so I know when I'm going to do it. I just don't know if it's going to work out. I don't know the future, but I know what I'm going to do. I cannot control the market. I can control my behavior. What's the cost? Swing.fxbootcamp.com. It's less than $100,000. It's not $100,000. It's not $10,000. It's not $5,000 or $4,000 or $3,000. But if you act quickly for less than $2,000. I mean, come on, dude. What do you want? What do you want me to do? I can teach you how to trade. What more do you want? How do I put the stop loss? Right here. Done. See? Not a problem. Okay? So it comes up and I get knocked out, or it roll over and I get paid. But the thing is, the stop loss is really just to manage the risk. I don't expect it. Right? So imagine this. Right here, right now, on Friday. In fact, it was the trade plan yesterday. But let me go over yesterday's trade plan. For next week, I want to be short 64.50. Okay? Let's pop this up and you'll see we're at 64.50 now. Cool. But that's what I did yesterday. That's yesterday's plan. Yesterday. So between today and Monday, I want to look to be short somewhere around 64.50. I said look to be short. I'm not short now. Look at the week before. This is what I did last week, guys. I wanted to be short here. On Friday, I could have taken the shot. On Monday, I could have taken the shot. On Tuesday, it actually broke out. Okay? So I could have shorted on Monday and not made money till Tuesday. I could have shorted Monday and not made it Tuesday. I could have shorted Friday and not made it, right? But the thing is, I know my price. Somewhere in this period, guys, remember, these are 1 hour chart, right? 1 hour candles. Somewhere in here, I have to look for a reversal pattern. Now, keep in mind, my plan was to sell there when we were down here on Thursday. So on Thursday, I had to have the fortitude of let it go high so I can sell it. Because I only sell high. Universal truth. I can only sell high. I'm a bear. I want it to go up so I can sell it. As long as it's not a bullish market. So here I am now, fast forward now. I know my price. 64.50. Is it going to reverse here? I don't know. Is it going to make a lower low next week? I don't know. I don't know any of this. But I know right now, between now and Monday, maybe Tuesday, somewhere around this price of 164.50, I will be on a small time frame, like let's say a 15-minute chart, and I will wait for a reversal pattern. How about something like this, guys? You ready? Let me help you predict the future. How about a double top, lower low, lower high, and I sell here on Monday. London Open, not London Breakout, London Open. I like to front run the London boys. I don't live off the crumbs of people that have trade plans. I get the full Monty, bro, because I have the full plan. I'm not reactionary. I plan ahead. Okay? See what I mean? So what if I sit here and it does this? I never got a trade. I'm not in it. Well, I'm in it here and I'm up higher. Okay? So if it breaches higher, I'll probably pull the plug on this trade and then try to decide what to do on my other trade. But how would you guys grade these trades? Okay? Let's clear this out. Let's clear this out. Let's do this way. Okay. I'll zoom in so you can really see it. I shorted this and I shorted this. Good, bad, or stupid? How would you grade those trades? Yeah, no, homie. Email me, Wayne at fxbootcamp.com. Yeah. But you can see I'm planning ahead, right? I didn't guess. Down, 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 right? Let's do this one. So, right? Sell high. Down, 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 up, up, sell. Down, 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 up, sell. By the way, there's also role reversals in here. Okay. Okay. Obviously, I don't like the position I'm in, but I saw it coming. I'm okay with it. I don't like it, but I understand what's going on. And it's part of the reason it's doing this is I'm stuck in a medium-term trade plan as a long-term trade plan is developing. So I'm kind of in between. I understand that, and I knew it was going to happen, and you know, I can't live in hindsight. So I'm waiting one more kind of thing. So anyways, so we've done a lot of Swissies. Yeah, crypto says the trend is still down. Yeah, so that's why, but it doesn't have to be. It's a mediocre situation, and I admit that. Okay. Let us go. Let's go. Let's do a trip around the world. Did that one, did that one, did that one actually already. Gold we've already done. Euro dollar we've already done. I guess we have oil to do. And oil, I'm just stuck on top of old support. I almost bought it at 59.55 a couple of times, but I didn't. So I guess that was good. How many dollars am I in profit? I don't know, just a couple of grand or something. Yeah, so it's been like this. Like NFP has come and gone and nothing's changed for me. So anyways, guys, look, this is only a 3-hour webinar. If you go to tradersway.com and open a demo account, even just a demo account, in your back office, there's a button that says live webinars. I do a daily live webinar. And I can teach you technical and fundamental analysis day after 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 day for free. So, right? So feel free to do that. Tradersway.com. All right, so it looks like most of these things have already kind of done their thing. Well, I've covered a lot of pairs already. So I'll tell you what, let me reload my coffee. I'll be back in 45 seconds and I'll start doing requests. So you tell me what currency pair you want and I'll go through them with you, okay? What do you stink? Smell like a plan? Good. All right, back in 45 seconds. can't hear you. What? Master! Master! Yeah! All right, some Q&A. Chicka, 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 Slim Shady. All right, so let's do request Q&A live, baby, live. What do you got? What's on your mind? Euro yen is the first one I see up there. Let's do that. Master. Euro yen. I want to move. I gotta move. Give me the juice. Let's see. All right. So Euro yen, I am short here. What do you think? Okay. General overall plan. Here's my monthly swing trade plan. So this is a front run of my January trade plan. So yes, in December, I traded my January trade plan. My January target is 119.50. So I sold at 122.50 for a target of 119.50. Got to about 120.50. Then we've had our hiccup. And this is my last shot. Between now and Monday, I might have the opportunity to sell around 121.70. So as you can see, yesterday, I had a trade plan of down, 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 up, up, sell. So now in here, I'm just looking for a reversal pattern. Yes, Max, wage increases have to do with inflation. Wage increases, right? Increases your marginal propensity to spend. Your marginal propensity to spend increases other people's income. Other people's income increases marginal propensity to spend. As marginal propensity to spend increases, it pushes up supply, drives down demand. Prices rise, which creates inflation. Inflation creates the need for the Fed to raise interest rates, lower money supply, and weaken the dollar. You're welcome. Next, pound dollar. Pound dollar. Cool. Pound dollar. Okay. Right now, it looks like down, 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 up, up, sell, down, 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 down. The down, 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 down part assumes dollar strength. For that to happen, you need the Fed to lower rates further. If that's what you think. Okay? However, that play might be done. Okay? So now if you're a bull, you're thinking somewhere different. You're like, okay, I get this. This was the Brexit news. Okay, gotcha. So now we're done with that, right? Well, maybe. But anyways, if a bull would say up, oops, do this in blue. Up, 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 down, down, buy. This right here is the buy zone for bulls. So they better act if they're going to act. We don't know if they're going to act, but if you are a bull, you're going to look for something like this now. Okay? So a bear is thinking 126. A bull is thinking 137. Okay? Right now, because we lack higher highs and lower lows, it really looks range bound. So currently we're stuck here. Okay? But not a good place to sell, a better place to buy. I mean, if you had to sell, you would be selling more like day trading, and day traders would do this. Down, 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 okay? But I prefer to do that in an overall bullish or bearish move, right? So I don't know if we have that. Seems mediocre right now, but do what you want to do. So for example, if you're a bear, there's your long-term plan. If you're a bear, this is your short-term plan. Okay? So for example, let me dive into this further. This is where bulls take profit. This is where bears sell. And this is where bears will sell this week. You understand? Do you understand? This is a bullish take profit. This is a bearish entry. This is a bearish entry. So this is bullish. This is bearish. This is bearish. So therefore, we're in the midst of a bearish trade plan. Someone is selling at 131. Okay, if NFP scared you out, that's fine. Otherwise, if you're a bear, you would have shorted this already. It's already done, son. Where were you? This is a 4-hour chart. Try it on a 15-minute chart. Okay, where's your 131? You already knew this yesterday, for example. Do you understand the theme here? I keep telling you about this was planned yesterday. This was planned yesterday. So why are you planning today's trade? You're supposed to be planning tomorrow's trade. You understand that? That's what I'm trying to get across. Today is irrelevant. You should have already had this done before. So what are you doing right now then? Planning Monday. Okay? Oh, those are pivot points. If you want my chart templates, you have to go to metatraders.com. Metatraders.com. If you want my chart templates, I give them all to you. It costs you $5 though, full warning. Full warning, $5, $4.95. Woo! But anyways, those are pivot points. So you could have this whole setup for $5. And a bunch of other things too, of course. Okay. All right, so next one. Next. CAD yen. All right, let's do kitty CAD yen. I wouldn't want to do this until oil moves off of its area, but let's take a look at it. You ready for this? You ready? There was the plan. Okay. This is a take profit zone. You must exit. Do traders respect these pivot points I use? Oh, I don't know. What do you think? Okay. Boom, ba-dum. So that's a big move, crazy move. A little bit of volatility there, huh? Cool. Let's take a different point of view. Let's switch this out. Let's add medium and longer term to this, just so it's pretty clear of where we're going. What is the trade plan for the month? The projected high currently for CAD yen is 85. So if you bought at 83, you're targeting, actually it's targeting a little higher. If you bought at 83, you're going for 85.40. Okay? So here's my trade plan tomorrow if I'm a bull. You ready? Here's next week's trade plan. You ready? If you spend, how many people here are sick of spending hours and hours and hours and hours and hours in front of their charts? Huh? Anybody here? Anybody sick of spending hours and hours and hours and hours sitting at their desk, staring at their charts? Let me show you how you do this. Okay? This is where you're supposed to exit. I know bulls are going to exit that. So what am I going to do if I'm a bull next week? I'm going to buy around 83.50 and I'm going to drive it up to 85. Done. That's how much time I spend on my weekly trade plans. I'm done. So you can set an alarm. Say, hey man, if we get down to this 85.75, wake me up before you go. There's no fear of missing out. I'm in front of the trade. What are you talking about missing out? Okay? So here's my trade plan. Ready? Up, 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 down, down, buy. Up, 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 done. Take profit, walk. Done. I'm done all my trading next week. Now I just have to wait. If, do you remember the if-then statement? If it drops down closer to this 83.50, then I want to look for reversal plans. So there's just a period of time when I'm down here that I'm looking for this on a small time frame. Then I buy it, I drop my stop here, I'm done. Drop the mic, walk away. Woo! I'm done for the whole week. That's it. You can have an entire currency trading career working an hour a day. That'd be enough. That'd be enough. Huh? That's enough. Cool. That's right. There's hope for you, man. There's hope for you. Are any of my swing traders here today? How many people are in the swing trading group? Is anybody here? Where's my backup crew? Where's my support system? Where's my team? Oh, well, I'm not going to make one trade. I'm saying that's how long it takes me to plan my trades. Now, I plan many trades. Okay? The trading part is very easy. So, for example, if I'm a bear, I have to be cognizant of, in the moment, this is not bearish. That's the first thing. The second thing, if I'm a bear, I want to sell off this 84. So that part of my if-then statement is, if I'm a bear, then I want to sell off 84. So now I need a reversal pattern. So if I'm a bear, then I want to sell a reversal pattern at 84. So now I spend maybe the hour waiting for it. Or come back in a few hours and wait for it. Or come back on Monday and see if it double tops. Okay? Most of my time is done waiting. The trade planning's easy. Okay? And now I have to decide, am I going to take a shot here? That's it. That didn't take very long to plan. That's the easy part. Now I got to be ready. Jean-Guy, PJ, Ron, James. Nice. Jim. Gregory. Highlander. John, yeah, thank you. Hunt for trades, do I incorporate COT? Sure. But most importantly, it's monetary policy, right? But COT, especially extreme levels, sure. I go through commitment of traders report, I don't know, every 3 months, I guess. Okay. Okay, cool. Is it anybody here going to join us in the swing trading group? Remember, I'm going to do a special week coming up where every single day we'll do day trading on top of the week and monthly trade plans. We'll do day trading over and over and over and over so I can show you how to incorporate long-term trades, medium-term trades, short-term trades into your daily routine, into your regular routine. So if you're going to join now, because I've never done that before. I've been doing the swing trading group for years. Some of the people here have been in for years. I've never done that before. I'm going to do it. So now's the time, brah. Swing.fxbootcamp.com. So that's what I'm thinking if I'm a bear. So I got the right price, but I don't have the reversal pattern. And I need the reversal pattern because this is not bearish of a trend. Now, if it was a bearish trend, I might be more aggressive and I might just take the shot, boom. But that's your prerogative. How do we join? Swing.fxbootcamp.com. Right? Swing.fx looks like this. Okay, you'll have to type that in, swing.fxbootcamp.com. Okay, cool. Next pair, let's see. I thought I saw an Aussie Kiwi, and I need to address that. So I don't prefer... Thank you, moderator. I don't prefer cross trading. Nothing wrong with cross trading. I just don't prefer it. Okay? I'm a macro trader. And when you cross trade, you're doing something different than macro. You're doing micro versus micro. Okay? You just happen to be trading what the pound is doing versus what the Aussie happens to be doing. Now, you can see that's a very, very logical setup. There's actually two setups here, guys. Doesn't always occur, but the two setups here is if you're still a bull on this move, it's supposed to do this week, but it hasn't done that. Okay? If you're a bear, you're looking at the you're looking at the left shoulder. Okay? And your trade plan is this. Okay? Now that's a daily. So that's called strategy. Now, I combine strategy with tactics. This is why my book is called Strategic and Tactical Forex Trading. You're like, oh, that makes sense. Of course it makes sense. Anyways, if that was your plan and you knew this was a shoulder, again, let me show you the shoulder if I can, if it'll let me. Okay, very clear, very, very clear. Okay, let's go to a 15. Okay, so I tell you, this is where you should drop in. Remember, if it rises back to 91.50, then look for a reversal pattern. Okay, how about things like a breakout? Well, you can very clearly see a range here. And you can very clearly see a breakout. Breakout, pullback, gone. Okay? Now, this is where people get mixed up. This is where traders that learn only technical analysis, they look at this and they might actually trade it this way. They make their 25 pips and they shut it down and they're all happy with themselves. Look at all the money they made. They can buy a grande latte with all the money they made today. The problem with that is they never let the winners run. And the reason they don't let the winners run is they don't understand the bigger picture. The bigger picture for this is the first closest, smallest projection that this trade is worth is this. You should be short 91.50. And you should be targeting 83, let's say. What? Yeah. There's a 1 in there. Sorry, 191. Yeah, I know, right? This is worth, in my humble opinion, the difference between 191 and 183. This is called letting your winners run. Universal truth number 2. Let your winners run. I bring this up to you because if all you do is this, and you're happy with your results today because you sold here and now you're done and you feel really good, you're doing your disservice and you are ruining your destiny. You will never achieve your destiny. Do the math. If you sit down and do the math, 60% of your trades are winners, 40% of your trades are losers, average win is 25, average loss is what? 25, maybe worse. How much money do you actually make at the end of the year? Small. But I bet you in this scenario of mostly winners, I bet you anything you still lose money. Just do it. Do the math. Do it. Do it. Okay? Out of 1,000 trades per year, with those stats, how much money do you make at the end of the year? You make hardly anything if you're good. Now, here's what then is the inevitable thing. You're like, man, 60% of my trades are winners and I'm not making the kind of money I wanted. I can't afford a Ford Taurus, yet alone a Ford GT. So you're like, I guess I got to jack up my leverage, and you're dead. You're just dead. It's over. Financial suicide. And you know it's true. You know it's true. You know I'm telling the truth. You know I'm right. So then why does it happen? You know letting the winners run is the right way. Why don't you let the winners run? You don't know how to trade plan. You don't even have a plan. You're just reacting. You're like, oh, I guess this is a breakout. I guess this is a retracement. Boom, I'll take that. And then that's all you know, and you don't know what's next. You don't even have a thought. You haven't done the analysis next. There's no next for you except you're going to cash out of that small win, and you're going to come back on Monday and go, what are we going to do now? Let's start all over again. When is the best time to swing trade? I got 3 answers for that. But on top of those 3 answers, why don't you join the swing trading group? And I'll teach you live. And you get the video training course included for free. Okay? Yes, absolutely, sure trade. Absolutely. Today I was a little tardy on yesterday's video. There was a problem with the upload, so I had to re-upload it, and then all the whatever. So today usually it's up by noon, or a couple hours after the session. So yeah, definitely. So when you log in, you'll get the last, like, I don't know, 14 weeks of videos. So right off the bat, there's going to be like 20 hours of videos for you to watch if you want. Okay? But, okay, anyways, going back to this, what are the universal truths that we do know? Small wins do not work. Big wins work. Small is for losses, big is for winners. So if you don't let your winners run, you will not succeed. You will not have big winners if you don't plan because you don't deserve it. Now you might not have plans because maybe you're pretty good at technicals and you have no idea about fundamental analysis. Well, this thing above me is a degree from Harvard University that says macroeconomics on it. I can teach you. That's easy. I can teach you. So you got it, man. You got everything you need. We can do this. You can do this. Unless you're lazy. If you're lazy, there's no hope. It's your mother's fault. But I bet you it's not actually. You're right. You're born lazy. Nobody can do anything for you. So if that's you, I'm sorry. Well, actually, I'm not sorry. But if you have a ridiculous, sickening work ethic, I can work with you. Right on, Sure Trade. Sure Trade's going to be there. Remember, Thursday at noon. But over the weekend, watch the video, Sure Trade. Okay, next currency pair. What would you like me to cover? Oh, you know what? I was on my way to Aussie Kiwi, right? All right, so the other part I wanted to cover with the Aussie Kiwi is I said it was micro versus micro, didn't I? Here's the issue. There's too much similarity . Let's do this one. There's too much similarity between Aussie and Kiwi. Now, you might get really upset with me because you're either Aussie or Kiwi. And you're like, wait, man. Okay. So like when I've had relatives over to my house from Australia, they pop open their phone. They're trading the Kiwi and they do so much. Aussies and Kiwis do so much. They're always exchanging their money. So my uncle was here. He's a race car driver. While he was here, he bought a race car in New Zealand, was going to have it shipped over, but he had to transfer his Aussie over to New Zealand, but then they were playing the game to get a better exchange rate. I'm like, right, there you go. So Aussies and Kiwis are really good at this. But outside of that, it doesn't matter that much because they're influenced a lot by each other. And also by China. Now, Aussie's influenced more by China than New Zealand, but New Zealand is influenced by its larger cousin Australia. So if Australia moves because of China, Kiwi is going to be at least somewhat effective, meaning the correlation is high. Let's say I'm going to make up a number, 0.85, and it's a positive correlation. So when you look at it from my point of view, which is a macro point of view, I am a macro trader. That's why I have a macroeconomics degree. I'm a macro, which means I'm looking at the entire world. I'm not necessarily looking at Australia. I'm not necessarily looking at New Zealand. I'm looking at the entire world, global GDP. And I say things like good or bad. And once I've made that determination, I got either 15 trades up or I got 15 trades down. Okay? And if I say up, these are both going to go up. And if I say down, these things are both going to go down. Now, they're not going to, one might be stronger or weaker than the other. That's relative. Okay? But on top of this, there are good trades. But I wanted to make that clear. I don't cover Aussie Kiwi much. I can cover it time to time if you ask. Remember to come to my daily webinars. Just need to go to tradersway.com and open up a live account or a demo account. And in your back office, there's a button you click to join the webinar. Easy peasy. Okay? But, right? So let's take a look at this. The trade plan for the week was sell here. No, sorry, trade plan for the month. Let me zoom in. These are monthly trades. I'm sorry. Let me change the template so it's clear. I want to make sure I'm not making a mistake here. Monthly. Yeah. Okay. The trade plan for January when we were in December. When we were in December, the trade plan was sell here, exit here. Okay. If you go through the swing trading course, there are quirks. There are quirks. There's little secrets. There's little bit of finesse to some of these situations. One of them is this. And anyone that's gone through knows what I'm highlighting here. It's not the fact that we hit this price. That's irrelevant. It's a quirk to how we hit the price. More specifically, when we hit the price. In that quirky scenario that you're looking at right now, the swing trading course tells you we're going to reverse back to here at a minimum. How many people can confirm that? That in this quirky little scenario that you see right here, you fully expect this to go back to here. We are talking about from 103 all the way back to 104.5, 150 pip retracement. Retracement. Okay? How many people know that? Like that's just, you knew that was going to happen before it even happened. That's called knowledge, son. This is called knowledge. Okay? You have to know these things. Otherwise, you're wandering in hopeless night. Isn't this amazing? Now, if it happened over here, same price, you would not have that same expectation. In this scenario, you're like, oh man, there's going to be a big retracement, a full-on counter trend. Max, how do you know this? I'm a genius. No, dude, I've been doing this for like 20 years. And I have a ridiculous, sickening work ethic. I've gone to lengths to learn how to trade, to teach myself how to trade. I've gone to lengths that you would find ridiculous. I'm a ridiculous person. Which means you don't have to be as ridiculous. For example, I'll give you an example of ridiculousness. I mapped on a chart my emotional intelligence. And what I did was I started with the year I was in. And I said, am I having a good year or bad year? Do I feel happy or do I feel sad? How do I feel and why? And I documented all the good things and bad things. And I went through this big, long process. What were all the good things that happened? What was all the bad things that happened? And then, how would I score this? Then I did it for the year before. Then I did it for the year before. Then I did it for the year before, the year before, the year before, the year before. It took me weeks. And suddenly, I'm trying to remember my year when I was 3 years old. And I had to struggle. So I did like, where did we live? What city did we live in? Do I remember our house? Like, I was in preschool. Do I remember preschool? What was the room like in preschool? What were the people like in preschool? And I'm not joking. I got to the point where I could map out my preschool. Preschool! I can map out the room where we played with toys. I can tell you what toys I played with. I can tell you the time when someone took a plastic camera away from me and hit me in the head with it. And I asked my mother about that. Like, did someone hit? And she's like, well, I kind of recall that. Yeah. And then I remember like D-I-N-G-O, 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 and Dingo was his name. Oh, there was a farmer who had a dog. And I remember this. And then I'm like, but wait, where did we have lunch? Wait, there was a nappy time. But we didn't do nappy time there. We did nappy time on a lower level. That's really strange. But I remember taking naps on a mat. So what was my house like? And I went all the way back. Like, you have all these memories here. Now, the scary part is you can open up a door and say, oh, shit, I wanted to forget that. You have to be ready. You got skeletons buried in there. I opened every door I possibly could. All the way back to my earliest memories. Okay? Then I realized my experience when I was 8, emotional experience when I was 8, can't be the same as when I was 18 and can't be the same when I was 28 because I had bigger experiences, you know? When I was 20 years old, I sat on a board of directors with George Soros. No, wait, I was probably 22. When I was 22 years old, I was already working with the likes of George Soros on a board of directors. Okay? So how could I compare that when I was 8? So then I did some math and I did a slope and a regression and all this kind of stuff. And I spent weeks and weeks and weeks and weeks and weeks in this. So I know myself. I know the good and the bad and the ugly of myself. Most people don't know who they are. They don't know their strengths and weaknesses. So I've done this for my emotional intelligence. I do this for my Forex trading. But then I said that's not enough. So then I went back and I had my mother do the same exercise year by year by year, going all the way back to the day I was born, based on what she interpreted my life to be. Did I have a happy year when I was 3? Did I have a happy year when I was 13? Did I have a happy year when I was 23? Max, don't even say that. That's just rude. Okay? It's like me coming into your house, Max, and saying, your mother's ugly, Max. Dude, seriously? That's rude. Come on, keep it in check. So anyways, what I was saying is I'm a very ridiculous person. And I go to extremes to improve myself and to improve my trading and to be a good coach and to be a good trader. And hopefully I'm trying to be a better husband. I'm trying to be a better father and all these things. But you have to be ridiculous. All right, Max, I'm done then. You're at a point. That's dude, I'm answering your question. What's the point? Why are you asking me questions? Come on, Max. That's not cool. All right, so now what? Let's do another. What time is it? I got 15 minutes, guys. Let's do more. Let's do more. Come on. Let's do more. Let's do a couple more. Let's bang through them fast. No, dude, Max, maybe your culture and my culture is different. I'm answering your question. You're like, dude, what's your point? Dude, I'm in the middle of a passionate answer to you specifically, and you're like, dude, what's your point? Okay, you just shut me down. Fine. I don't want to answer your questions anymore. I take it as rude and, yeah, I don't know. Disrespectful. To me, the way you're coming across, maybe I'm reading it wrong. Then I apologize. But that seems disrespectful. So if there's no point, then I'm done. Cool. Gold, we started with gold. We can go back to gold. What else? Kiwi dollar. Cool. Kiwi dollar. Kiwi dollar. I thought I had Kiwi dollar out here. Let's do Kiwi dollar, then gold, because I already did gold, right? But we can come back to gold. Kiwi dollar. All right, cool. Let's take a look then. We were traveling just beautifully here. Beautifully. Bip, 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 bip. Now this is the interesting part here, right? Actually, the world says when I'm going to be back in the Caribbean. Someone asked me about it yesterday. There's a couple of things I'm working on out there, and I might have to go back soon, but don't know. So this is when we found out the Fed has probably stopped cutting interest rates. And I said, when that happens, the dollar is going to weaken. Cool. So anyways, we get into this regression. What a regression is it measures the average and the deviation from the average. One standard deviation above, one standard deviation below. Cool. So let me kill this because I believe that's a ray, not the full deviation. So let me redo this. Okay, and that's really what it looks like. Okay, cool. Okay, so what this is telling us is that based on the average price over this period, this is the average. But average is average, it's right? Average is just average. Price is very rarely on that price, right? It's very rare that price is on the average price. So it deviates constantly from the average, okay? Here's a positive. It's not really positive. This is above average. This is below average. This is above average, below. And based on all of this, it says this is the projected one standard deviation above the average. And that's typically when we revert. Not that it has to, but based on past, that's where it's likely overbought. Okay? That's one part. So let's give it a couple clicks in. This is the selling bearish pivot, which means if you are a bear, if you're a bear, then that is your price for selling the entire month of January. And it just so happens to occur on the first day of January, which is the best time to sell. Okay? If you happen to be a bear. Now, let me be clear. Does this make you bearish? No. Your fundamental analysis makes you bearish. Okay? Fundies make you bearish. But if you happen to be a bear during this up move, that's fine. Like, for example, if you're analyzing the dollar, fundamentally, you might say the Fed is going to cut one more time. And you feel like they're going to cut in January. Because we know, like, when's the next meeting? January 21? Is that about right? Right? Somewhere around there? So if your opinion, the Fed's going to cut in January, this is what you would do. Now, That's your opinion. You would have to say, you've looked at the facts, you believe the Fed's going to cut one more time, and then they're going to pause. Now you should be doing things like looking at the Fed Watch tool, which is the difference in pricing of money market, well, of the Fed funds futures market. Okay? If you analyze the change in prices over time in the Fed funds market, it will tell you if smart money, like banks loaning money to other banks, doesn't get any smarter than that. They're not even lending it to clients. They're banks lending money to other banks. Okay? You could analyze the change in price in these Fed fund deals. It's money being loaned to other banks. And based on the pricing, you can determine whether they've priced in a Fed cut or Fed hike or no change at all. And from that, you can get a very solid opinion whether this is going down in the next 3 to 6 months or not. It's only math. Does anyone not know how to do that? Is there any Forex trader here right now that doesn't know how to use the difference in pricing over time of the Fed funds market to determine whether you should be buying the US dollar or selling the US dollar? Does anyone here not know how to do that? If that is true, you have some very serious things you need to learn. There's a giant gaping hole in your fundamental knowledge of really how this market works. It's the same banks that are determining whether the dollar should go up or down, right? It's the same banks putting in the trillions of dollars every single day into our interbanking system. It's the same banks of the interbanking system. It's the same process. They're negotiating with each other based on their analysis, and they're pretty good at this. And remember, it's not one banker or one bank, it's every bank in the world, essentially, right? Well, if you don't know that, you're missing like the whole raison d'etre of this whole thing. Like, you're missing the whole interbanking system. What you're trading then is video games. You're playing Forex like it's Fortnite. No. Forex is not Fortnite. You got them mixed up. Okay? I think I did last month or the month before. It's already recorded. Go through the FX Street YouTube videos. I've already done it multiple times. I've done live FOMC events on YouTube. It's all been documented dozens of times. Okay? But the problem is now I'm out of time, right? There's not enough time to cover that. But at least I just told you. Write this down. Take notes. Write this down. Get out there and get knowledgeable. Whether I teach you, whether you take the fundamentals course at FX Bootcamp, whether you come to my daily webinars, whether you read someone else's book, whether you go and take someone else's course, I don't think you're going to learn it if you take a university course, right? They don't cover this at Harvard. Okay? I learned macroeconomics from people that work at the Fed. Right? I took 2 courses from a woman that works at the New York Fed and 1 advanced macroeconomics course from a guy that is a senior economist at the Boston Fed. So he'd work at the Fed all day in Boston, drive across the Charles River into Harvard and teach me macroeconomics, right? But we never covered that stuff. But I can teach you, okay? I can teach you that. It's been done, and I'll do it again. I just won't do it in 8 minutes. Okay? Okay? But the thing is, like, here's the type of person I am. if I just found out I need to know something important, and now I know what that important thing is, you can't stop me. I'm going to do whatever it takes to get that knowledge. Okay? That's just who I am. Now I'll need to figure that out. Like, what? Did that guy just tell me that if I use the difference in pricing of bank-to-bank loans for Fed funds requirements and the price that they negotiate these deals with, and by the way, these are not like opinions per se. This isn't sentiment. This is billions, hundreds of billions of dollars a day negotiated. Like, this is money on the table, contracts signed, real deal stuff. And you can use this information, how Goldman Sachs loans JP Morgan money or vice versa, and you can figure out what they negotiated, the terms of their negotiation. They don't tell you. You can figure it out with math. Now, luckily, I can sit down and I can do bond math. I've taken a whole course on bond math. And you can go, oh, based on that, here's the variables, and this is what they priced in for the interest rates in March. Now you just figured out what both JP Morgan and Goldman Sachs think interest rates are going to be in March. Now, once you understand that, then you take it to the next level. How do interest rates impact demand for the US dollar? Because it's about supply and demand. If the interest rate is this, this, or this, what has the Fed done to supply? And at that rate, based on global macroeconomics, what is the demand for the dollar? It's only supply and demand economics. Okay? Once you know that, now we're talking fundamentals. Remember when I said earlier, NFP is not really fundamentals, ADP is not fundamentals, ISM is not fundamentals, right? PCE, CPI, that's not fundamentals. Those are news releases. They're economic reports. And then you analyze the trends of those to then understand what the Fed might do. Well, what might the Fed do? Well, affect supply and demand. And then, of course, smart money opinions negotiating hundreds of billions of dollars a day based on these opinions. That's what negotiation is. What's the right price? What's the right price? What's the right price? Well, they're using that analysis based on their knowledge and their PhDs and their quants and all this stuff. They're using that knowledge to say, well, this is what the Fed's going to do, and therefore this is the price of that billion or the $10 billion loan I'm going to give you. Well, how did they get to that? How does the Fed make that decision? They look at the long-term trends of NFP, ADP, CPI, PCE. So one individual event like the NFP that came out today, irrelevant. Will that change the Fed policy? No, then it's irrelevant. It just throw it into the trend and it just averages down. The average is currently 164. And what's the new average? 161. Great. Nothing's changed, bro. But if you analyze all this, you'll understand how it'll impact the central bank. If you pay attention to the central bank, they tell you how they're interpreting it and what they might do. Then you can use things like that Fed Fund Futures pricing model to say, oh, now I can figure out what Goldman Sachs and JP Morgan and Bank of America and Wells Fargo is doing in their negotiations of $100 billion deals with each other and what they're settling on. You can figure out what the assumption is for the future interest rate. Now, game on. Now you're smart money. If you don't know how to do that, I can teach you. Cool. But why don't we start with swing trading? Why don't you join the swing trading group so I can say, you know what? That's a sell. This is a buy. Sweet. Okay? Bulls are going to do this, bro. Bears already did this long time ago, and they knew it in advance. So like I said, today is already done. When Monday shows up, if you come to my webinar on Monday, guess what? Monday's already done. On Monday, I will teach you what to do on Tuesday. On Tuesday, I will teach you what to do on Wednesday. On Wednesday, I will teach you what to do on Thursday. On Thursday, I will teach you how to plan all your Friday trades. Today is done, it's already irrelevant. Every today is already done. That's why, like, fear of missing out. What do you mean fear of missing out? I'm already on tomorrow, bro. I will teach you how to do that. It's going to take time, effort, sacrifice, and money. You have to have all of that. You're going to have to give up all of that. If you're not willing to give up all of that, it ain't going to work. I can't help you. Any questions? Thank you to FX Street. Thank you. Non-Farm Payrolls live, month 165. Oh, you open up an account at tradersway.com? Awesome. Then you go to your back office, log into your back office. There's a button that says live webinars. I'll be there on Monday. Monday morning. Take care, Javier. Thank you, moderator. World's greatest moderator. How can you follow the seminars? You click on the button every day and log into the webinar. Okay? If you want to join the swing trading group, it's swing.fxbootcamp.com. It's a little bit of money. It's a lot of time and a lot of effort. You're either in or you're out. You're either going to change everything you do or go back to doing what you've always done. It's up to you. I've been doing this one webinar almost 14 years. Yeah, this one webinar. My first Forex account, you couldn't even use a credit card. My first Forex account didn't even come with charts. I had to pay $150 a month for charts. So thank you everyone for that's here. Thank you very much. Thank you for your time. Thank you for investing 3 hours with me. I apologize if I got all pissy with Max, but it came across as disrespectful and I don't like that. So I apologize if I came across pissy. I hope I answered your questions. Many of your questions were very good questions. I hope I covered enough technical and fundamental analysis to make it well-rounded. Yeah, the reason I do the swing trade group on Thursdays is so that we can plan, you can be in your Monday trade before Monday. Okay? I record everything. There's a video training course so you can learn how and all the techniques. Okay? Thank you, Max. I apologize as well. You come to a lot of the webinars, and I do appreciate that. I do appreciate you. So something must have just come across wrong. Maybe I rubbed you wrong. You rubbed me wrong. I don't know, but I do apologize. I do believe you're a good person, Max. Maybe we're just a couple of alpha males. Every once in a while, you butt heads. Maybe, huh? At 11 a.m. New York time on Thursdays, we do swing trading. Now, I think in a week, not this Monday, the following Monday, we'll schedule it so that I do a Monday, a Tuesday, a Wednesday, a Thursday, and a Friday swing trading session so I can teach you how to day trade as well as swing trade. Okay? I've never done that before. I asked people if they thought that was going to be beneficial and they loved it. So I'm like, let's do it. Once or twice a month, we're also going to go through your trades, not just my trades, so that you can get feedback on your risk management, your entries, your targets, your management, and such, so that it's tailored to you. Swing.fxbootcamp.com. Any last questions? I don't want to take too much time of our moderator. She's got things to do. If you have questions, email me, wayne@fxbootcamp.com. So, without further ado, peace on earth. May the pips be with you. May your profits be above average. And please have a fantastic weekend, huh? You earned it. You deserve it. Cheers.